What's up, everybody, and welcome to Chart Request Live here on Stock Market TV. We do this every Tuesday and Thursday at 1 p.m. Eastern Time. Live, you bring your tickers, we'll bring the charts. I am joined today by my esteemed co-host and friend, Patrick Donawilla.
Hey,
How's it going, Pat?
how you doing?
You ready to do some charting?
Oh, absolutely.
So I've been out. This is my first CRL in like over a month.
I know. Welcome back.
You and Spencer have been killing it, but I couldn't let this show go because I think you agree with me. It's probably the most fun
Yeah,
of all the videos we get to do here, right?
that's what I've been saying. I mean, first of all, we get to see a ton of new tickers that you and I might not be watching. And hey, we don't have to prepare. That's really nice too. But it's really nice to kind of just show other people kind of how we think about these charts and how we ultimately come to these levels and conclusions, right?
I think it's like a huge win-win. I think it's not just our favorite. I think it's also the people's favorite. Like, you're right. They get to see our process and kind of like exactly what we're doing on a day-to-day basis, how we're kind of, digging through and analyzing these different tickers. But then also, like you kind of alluded to, like, we're winning huge here because JC and I have joked for years that like our clients have the best trade ideas, right? Or best stock ideas, right? Like, we're constantly getting emails with like all these different ticker requests and ticker ideas and, hey, what do you think of this stock that we've never heard of? So like on this show, we get to do that live, and we're just like kind of bombarded with 30, 50 different tickers, and a lot of them we don't know, and we get to, just figure it out as we go. So what do you got? We got anything good today?
All right, yeah. So this one, I'm not sure who sent it. Somebody in our email. And by the way, guys, if you guys email us, what is it? Spencer at Stock Market Media? Is that the best email?
Yeah.
Questions at Stock Market Media. If you just shoot your tickers there, we'll make sure to get to them in this show. They usually give priority to those who email, so make sure you get those in. But one that we got in the email was one that I know you are definitely familiar with, and that's Palantir. That's ticker PLTR.
JC's calling me.
It's gonna have to wait.
All right. So, wow, what happened here? This must have come off on earnings. Yeah. So we ran really nicely into earnings again this quarter, right? The last report was here May 8th, right? And kind of led to this breakout. All right. So let's take a look. So this was kind of first quarter's earnings report. We were in a little bit of a range here, and the earnings report broke us out, right? Then we've enjoyed what? A double almost in 3 months. Right, we were trading at $7.50, $8 before earnings last quarter, ran all the way here to almost $20 on an intraday basis at the peak just last week, August 1st. And then earnings came out, didn't like them. We've sold off a good amount. How much exactly have we sold off? These stocks, I mean, Pat, these stocks come with so much juice that just a couple days of selling, now 25% off the highs, right, from Palantir. And, I should also mention, just this year, at the highs, up 240%, and today still up about 162%. So this is a leader, one of those new leaders, right? It's from the speculative growth space. You can call it an AI stock. It is certainly being treated like one, right?
Oh, you think so? You think it falls in?
Yeah, we had the initial like AI craze run up in January and February. Then like we cooled off for a little bit. And then I think they talked about AI a lot on their last earnings report. And we really got the surge where people were like, wow, this is a real AI name. So where can we define our risk to try to get into something like this? I always like to fib it first, right? So let's fib it out here. Okay. Probably just a coincidence that we pretty much ran all the way back to the 38% retracement and are now peeling back a bit. It's not going to help us get in though, right? So let's zoom in a little bit more here, and I would draw a level right here. So this is the April highs from last year. We had a little bit of consolidation around this level in June of this year as well. Now we're right back there, the scene of the crime. I think, that's a decent level to define your risk at. Really, with something like this, I mean, you wanted to get in on the base breakout back here, right? So this one has very much left the station. You can see the long-term moving average kind of flattening and now curling firmly higher, telling us that a new uptrend is underway. If I were to pull up momentum, you'd probably see some momentum in a bullish regime as well. So with some of these leaders, it's more a game of just kind of defining your risk and finding a level to trade against than finding some sort of perfect polarity zone, because you won't have it if the price action is so fast, right? Which will be the case for the hottest or strongest stocks. So for Palantir, I would say 15 and change. You could start to nibble there. And then I think you don't get confirmation that we're heading back higher, over longer time frames until we take out those pivot highs from August. That could be a little bit of, so I think you could even take profits there. That gets you about 33%, right? 15 to 20.
Good stuff. Good stuff. All right, so let's move on. This one comes from Wavy. Shout out to Wavy. He's always bringing us some good tickers to look at. VIV.
VIV.
VIV. Victor India Victor.
Telefonica Brazil. So this is a Brazilian telecom.
Is it?
Yeah. It's a popular ADR. Like I feel like we almost have one of these from every country. I wish Alfonso was here. He knows from doing the Hall of Famers, which is our scan of like ADRs, the largest stocks based outside the US but traded on US exchanges. We do that every other week on an international basis. This one's definitely on that list. How big is it? 14 billion. They tend to be large companies, right? So this would be like probably the Brazilian equivalent to an AT&T.
Okay. Now, does it have like a big dividend yield? Does it, even though it's a foreign stock, does it have the characteristics of a telecom stock?
5%.
Okay.
There you have it. 5% payout ratio looks okay. I'm not going to try to do fundamental analysis on here. No, but look, it's a mess. It's a huge mess. And frankly, when you zoom out on something like this, yeah, it is a lot like AT&T and Verizon, right? Just going down forever. So most people probably know already how I feel about telecom stocks. I hate them. I think they're terrible. I think you're better off buying bonds. These companies are just secular laggards. And it's not just true in the United States. Here, we're showing you that it's also true in Brazil. I would run from a stock like this. There's just far better opportunities. And it also is worth kind of discussing. We're in what we believe to be, I don't know, early to middle stages of a fresh new bull cycle. These are not the kinds of stocks that you want to be buying, right? Staples, utilities, even real estate is a little bit sketchy. These high dividend kind of safety quality plays, they're going to underperform. They don't have the beta, right? They're the risk off plays. If you believe this is really a new bull market, you want to be in the riskiest stocks around the world. I was just writing about that.
Yeah, I mean, you and I were talking about Vietnam and how that's kind of like a high beta version or a high beta way to play a potential new bull market and all that.
Can I just like cut in and give my own request real quick? Because it makes sense. Yeah. So I was just writing about this one. XSOE. After being out in Asia, I understand the importance of kind of differentiating between which stocks or countries come with geopolitical concerns and which don't. Wisdom Tree actually does a lot of that work for us. It offers a suite of ETFs where they actually like remove state-owned enterprises, right? Like socialist countries have a lot of this.
So like, give me an example.
In China, a lot of those are considered state-owned or at least state-impacted. And Wisdom Tree would go through and kind of pick them out of the traditional emerging markets index. So it's just
would something like BABA be a state?
I have to check on that, but I would argue that they should be removed, right? Because of what we saw. That's a huge problem in China. If you're one of the best companies, then you almost become like a treasury for the government, right? Where they're going to tax you more and stuff like that. So that's more of a gray area, right? Because it's not explicitly state controlled, but they have had their hands kind of in BABA's operations a bit too much for my liking. So that's the idea here. Not exactly sure if BABA's included or not included. I just kind of found out about this thing not long ago. But look at how clean the base is, right? So this stood out to me, just that we got a really clean level here. It measures up, like you call it a breakout at 30. And if you did like a measured move of the base, it would give you $6 back to 36. It's about a 20% trade. And what really stood out is that if you chart emerging markets, ex-state-owned enterprises, so XSOE, versus emerging markets, look, the reversal is, just about on here, right? So this is kind of telling you that between those two options, Alpha is going to be in removing the state-owned enterprises in the future if this base goes. So that one clearly stands out. And again, these emerging market stocks, risky stocks, risk-on groups, that's where I want to be looking. So like you got Brazil right, but you got telecom wrong, right? Right region, wrong sector.
Right, right. I think a lot of people, okay, I'm bullish the market, therefore tech, right? Or like aggressive US tech. There's other ways to have a bullish vehicle to express that. But anyway, let's move on to some of these other tickers. Here's another one that we got from the email. Arthur J. Gallagher and Co.
Yeah.
AJG. And that's pulling back from an all-time high earlier today.
Yeah, don't love this candle, but we had a similar one Friday.
But man, I mean, that thing has just been in a relentless uptrend since 2016.
Yeah, right.
And this is an insurance stock, right?
Yeah, let's zoom out. So a lot of these insurance names have just been secular leaders. You can go back even before 2016. Like, look, we broke out of this base in 2012, came back, checked in 2016. You're right, and then just straight shot higher since. So again, this would be one of those names where you just kind of want to find a level to get yourself in, especially if you are a longer term investor. A name like this should really appeal to you. Look at how shallow the drawdowns are, right? Like we've had some nasty bear markets. Sure, in COVID, they got hit a little bit. This is nothing compared to what a lot of other financials experienced during COVID. And then you can't even see the 2022 bear market on here, right? Look,
right.
So impressive price action. I would just fib this one out from like its most significant recent drawdown, which would definitely be COVID. Look at that. Right in the middle of this range. So not giving us much, the fib. There you go. Play the pivot highs here. 220, right? We're above there. Next fib is 250.
Looks good.
After that, 367. Pick your poison.
That makes sense. And you drew that from that base, what was that? Early 2000s or
no, 2020. I went
okay.
I could zoom out and we could fib it from this monster base back here. Hold on. Let's see. I love it when they line up like that.
Oh, I do too. The other day I had two different bases lining up at like to the penny. It was perfect.
A confluence of Fibonacci extension levels.
You gotta love it. All right, I got another one, and this is one we actually laid out a trade idea in this one in our weekly newsletter, The Buzz, that we do through the chart report. So this one is Verisk Analytics. That's VRSK. This one has been buzzing all over social media. We'd have to look at. Sorry.
Why is it buzzing?
It's buzzing.
Why is it buzzing?
Why is it buzzing? I mean, stocks pressing up against all-time highs, breaking out of a nice base. So this is a.
That'll do it.
What's up?
I said that'll do it. A nice chart pattern will get a nice buzz on, right?
There you go. And especially when it's a little less known one. Do you know much about this company?
Sounds like software. Data processing. Yeah, big data company. I don't know. Know nothing about it.
Provides data analytics solutions to the insurance markets in the United States and internationally. Company provides predictive analytics and decision support. So, hey, man, I'm noticing a theme here. Insurance.
Yep. Totally.
Just looked at Arthur J. Gallagher.
Yeah.
Here we got a industry that supports the insurance industry.
This sounds like an actuarial platform. Insurance data. Interesting. We got a theme here. And also Jersey City. Shout out.
Hey.
So 230. 230 is the level. Long all day. You can buy it right here. Still have a great risk return. This one, a very fresh breakout. We already got one shake, right? We got the false start, the shake. Now maybe we go. And look, if you're wrong here, you could be out losing $4. Nothing.
What would you say is a target for that one?
278. I mean, look, you could do this in one of two ways, right? You can measure the base on these. You don't have to use the fib. So if you want, you can measure the base. Sometimes certain consolidations or bases will not give you enough. Like that 161.8 Fibonacci might be 15% away, right? And I'll say that's
Right.
not, I need more than that. So I'll measure the base in that situation. So here, like just back of the napkin, 156 to call it, you know, I'll say 226, keep it simple. So $70, 300 ish. So that works too. 300. If you need more.
Oh, did you want to move on? You want to keep going?
No, I'm done.
Okay, sorry to interrupt you. So this next one is one I'm definitely watching. Maybe not the leveraged ETF version, but natural gas, right? Making some serious moves. Yesterday's little breakout-ish is kind of looking like it might have failed.
Okay.
It's on 10, so Boyle.
I was laughing because we reviewed the chart report on the show this morning, and I'm like, yeah, natural gas had a good day yesterday, and it's giving it all back now this morning.
Yeah.
Tell people why you're really interested in this one, Patrick. Why don't you be honest? Pat's
No.
long. You're long through UNG, right?
Yeah.
All right. So Pat is a little closet natty gas bull right now, I guess. And I think you're right. Like, look, it's clean. It looked for sure like it was going. Sure looked like a decisive breakout yesterday here, at least on UNG, above the pivot highs from the summer in May. And this is failing miserably, right? So we're back in the box for now. And frankly, when you see fails like this, I don't know about you, but I look right to the bottom of the range, right?
Yeah.
From failed moves, from fast moves in the opposite direction, that would send something like UNG back towards 6. And let's just pull up the futures quick, because you never want to look at a fund like this without actually analyzing the underlying.
Right. And Steve, actually, the ticker requested was Boyle. And I just mentioned UNG because of what you just said. Whenever you're going to trade a leveraged ETF, you always want to look at the underlying first to do your analysis, right?
We'll go to Boyle next. You're right. But look, probably no coincidence, right? That yesterday we ran up to the highs from March of this year.
Yep. And that was a failed move too. That was a nasty failed breakout. We got new lows on that.
You could draw it here exactly. Pat, great point, right? So this is what we were just talking about, right? This one looked like it was breaking out, looked like it was going, and then where? Right back down to the lower bounds of this range when it failed. So looking at something like this now, we kind of went above these pivot highs here. If you look at this first rectangle, stuffed at the old highs, now I would say, at least 250, downside at least to the pivot lows around 250. And if that goes, then you got to look back to the bottom of the range, which is right around $2. Now let's pull up Boyle, because I think this is like a double or triple bull.
Right? I believe it's triple.
I love how they use words like ultra. Like just say 3x. All right. Ultra super natural gas fund. Great. Look, this one's clean. At least it's clean. It looked like it was going. I think you were all a little bit too soon on this one, right? Everybody, it seems like everybody here asking about this, and probably you yourself maybe jumped an entry a little bit. Which is
listen,
fine.
Man, they don't call it the Widowmaker for no reason, right?
It's getting rejected hard, right? So yeah, tried to get cute, jumped an entry. Maybe you're learning a hard lesson today, down 10%. Again, I have nothing good to say about this until 54, right? Watch those pivot lows from July and August. That's probably where we're headed.
Yeah, absolutely.
What's that mean about like crude oil and energy futures? Like, do you give much credence or any credence to the price action in natural gas when you're considering like the broader energy space?
I don't know. Natural gas is kind of its own animal, isn't it? Like,
I would say no.
Yeah. But let's move on. We got a decent looking base here. BWXT. And that comes from H Chan in the chat.
Hey, this is something. What is this stock? How do I know
this? It looks like it's a trucking company. I'll take a closer look.
Trucks, construction, farm machinery. I love a good farm machinery company.
Yeah, you love your industrials. You always have.
I do. I'm not kidding. I do like the farming industry a lot. BWX Technologies, supply and provision of nuclear components and products. This sounds like an interesting company. I always know when I'm reading the description of a company and I don't understand things, they probably do something, pretty awesome. So nuclear fuel,
Yeah, this is really interesting.
propulsion, submarines.
I'm seeing this
Awesome.
segment also involved in manufacture of closed tolerance and equipment for nuclear application and converts Cold War era government stockpiles of highly enriched uranium, as well as receives, stores, characterizes, dissolves, recovers, and purifies uranium. So they're involved in the uranium space too. Huh.
This sounds awesome. That's how I know about it. I can, just like you're a little nat gas junkie and Ian's a gold bug. I'm a uranium junkie. I love the nuclear space. That's how I
Okay.
know this name. Yeah, I've heard of this one
Well,
before.
so actually somebody in our email asked us to chart uranium spot. I don't know if we can do that today, right? On Koifin?
It's hard to get that data, guys, and it is a super thin market. Trading
But you
View,
know what we could do? We
what?
we could look at URA.
Yeah, we'll
How
do
about
that.
that?
Yeah, we'll
Okay.
do that. I'm long CCJ right now, and see, this is a perfect example, Pat, of what we were talking about at the top of the show. Like, we're so lucky to get to do this. I would not have remembered this name at all. Right. I'm interested in uranium stocks right now. Go listen to the morning show with Larry McDonald. Listen to his interview segment. He is so knowledgeable about nuclear industry and all the developments taking place there. So we got to talk a little bit about it, but I'm always looking for ideas in this sector and in this group. And this, I mean, what's better than this, Pat? Against these former highs, call it $70, 70 and change. Look, you got the gap there. The market reminding us, hey, this level's still super important, even though, we peaked out and rolled over here more than 3 years ago. And then again, back in 2018, right? Hey, we still remember this level. That's what the market's telling us this past week. So maybe we come back, fill this gap a little bit. Maybe we don't. Maybe that's it, right? See this all the time. What is this, a breakaway gap?
I'm never
Right.
good with my gaps.
It's a
I can't
breakaway
remember
gap.
which one's which.
Yeah, this is the breakaway for sure, right? Clear level.
Breakaway or runaway gap. I don't know.
Runaways in the middle of the trend. Come on. All right, what's next? I love this stock. Thank you, whoever brought this one to our attention.
Well, while we're on it, let's take a look at uranium, URA.
Yeah.
And that is the uranium ETF. So those are companies involved in the uranium space, not the commodity itself, but obviously it'll probably work higher if the commodity works higher.
I look at uranium as one of those spaces where, as much as I do like to nerd out about some good uranium news, I don't understand enough. And I tend to think it's better with a lot of these commodity industries to buy a basket, right? Because if you're investing in individual commodity companies, they have very company specific things going on, whether it's, creating a new mine or some sort of a project, or they have a big debt load that could be a concern, right? You don't want to pick the wrong one. I think that is such a risk. In these commodity bull markets, these stocks go 10x, right? You don't want to pick the one that happens to go to zero because they didn't manage their balance sheet the right way, or because they invested in some bad project and they're dealing with government regulations in Alaska, right? There's weird stuff that goes on with all these companies. URA gives you a nice basket. It is dominated by CCJ, which is the biggest one, probably the one that you do want most exposure to. I'm individually long CCJ. That's one of the questions I asked Larry. I said, are they big enough and diversified enough that I don't have to worry about some of these company-specific problems, right? He said, okay, I think so. But who really knows? URA is probably a safer way to play the space. There are other smaller names.
And as you mentioned, CCJ is the largest in there, right?
Yeah. Yeah.
Okay.
So URA, I would get above these pivot highs. So 24, 24 and change. CCJ has got a similar look, but better, right? Kind of already resolving higher from that range. I think you could buy it back against any of these highs in the low 30s, 31, 32 range. CCJ, when you zoom out, it's just such a beautiful base. Look at this.
Yeah, you know who really likes this one is Todd Sohn, our friend Todd. He loves this name.
A lot of our smart friends are junked up on not just uranium stocks, but CCJ. I know I'm in good company with this investment. You should sell your natural gas and
You know what? I might do that after this.
So that's it. That's all I got for. There's also there's URNM, but I think URA has been around the longest. Yeah.
URNM, that looks pretty good too. I mean,
this is one of those Sprott ETFs. I would go with URA.
Okay. All right, staying on commodities, we got another one, SILJ. It's another triple leveraged ETF, or maybe double. To check.
No, it's not.
Oh, it's not. You're right. It's just straight up silver miners. I
This just
mean,
chunky.
you don't need the leverage on silver
Yeah, right.
miners.
You got the inherent leverage. They all have leverage on their own balance sheets. These companies,
Right.
seriously, they really do. So this is the junior silver miners, like as if junior gold miners didn't have enough juice for you, or then silver miners didn't have enough juice. They made the junior silver miners
Right.
for the real crazies. I mean, look, this looks just about as bad as everything else in precious metals right now. So uninvestable space. Looks terrible. If we break this, 930 level, I'm looking back to those lows around $8 from last fall. And this isn't something I would, be interested in buying for probably a good while here. I would look to these old highs, right? You got a block of potential resistance around $12. This one does nothing for me right now.
All right. You ready for an energy name?
Thank you.
All right. Eureka requested VET. VET.
Oh, VET. Vermilion.
Yes, VET.
Yeah, Vermilion Energy. Yeah.
Yes.
Is this an MLP, guys?
I'm not sure. I'll figure that out.
No, I don't think so.
I don't believe it is.
Crappy MLP. Acquisition, yeah, exploration development. So E&P name, Canada, US. I mean, they're listing like every country here, so who really knows?
Germany, Ireland, Australia.
Seems like it's a Canadian company. Founded
Why do you say that?
Founded and headquartered in Canada.
That makes sense.
So here we go. Got the nice breakout or nice bottom back in 2020. Really ripped off the lows. This thing went from $2 and change to above $20, more than 10x. Then we got, classic distribution formation here, just like we saw in so many stocks last year. And now it's the opposite, a little bit of accumulation. I would say there are far better looking, securities out there in the energy space right now, but this is kind of getting there. I think the 200-day moving average tells you all you need to know here, right? Still just coming crashing down on price right now. It's not resistance, but it is indicating that the primary trend is not higher yet, and that this base probably needs a good amount more time and probably ends up looking something more like this, right? With some choppiness before we kind of break out and finally resolve higher. Give the 200 moving average time to flatten and curl higher. That is like such a good rule that I try to follow when it comes to bases. Of course, you're going to have the V-shaped bottoms every now and then, but that's the exception, not the rule, right?
Yeah.
I would say more basing from something like this. There's much better looking charts in the energy sector right now.
Okay. All right. Let's move on to SYY. That comes from Daniel. Sysco.
Nope.
I mean, still hasn't been able to get above those COVID highs. Isn't that amazing?
This is the company, they do like the cafeteria services and deliveries and stuff.
Yeah, and not just cafeteria. I think all sorts of food services, even restaurants and all that.
Okay. So this, Pat, what is this called?
What's that?
What is this?
What is what?
What is this price action here?
It's a mess.
This is distribution. Right?
Yeah.
Passive distribution. 3 years of it. This is a giant top. If and when this resolves lower, oh God, look out, right? We don't want to necessarily be making the bet that tops are going to resolve lower in a bull market, right? So you are going to see a lot of non-tops or failed tops, right? Where if you really had to get into this name, you buy it against these lows and bet on the top failing, right? And this actually being some sort of prolonged range that eventually breaks back out higher, following up on this, short little primary uptrend back in early to mid 2020. But if, in the event that it does violate these pivot lows, 69-ish, you don't want to be anywhere near this, because you're going to have some significant downside, maybe even back to the COVID lows, right? This is this is a laggard. It's in one of the lagging groups. I believe this is a Staples name. Sure trades like a staple stock. Sounds like a staple stock, knowing what they do. It should be a staple stock. I'll bet it's discretionary, isn't it? Or industrials. What is it?
I think it's in industrials. Yeah. Yeah.
Search.
Oh,
Yeah, it's under industrials. This is a staple stock. It's a consumer staples name. This is a defensive company. Um, Quality, boring business, big
look how
dividend.
many times it's tested that 70 level
Yeah,
in the
right.
past 2, 3 years.
Well
Huge.
tested. If that goes, no, gotta be short if you're gonna be involved at all.
All right. Can I request one while we're on this topic of
Please.
cafeteria food and all that? Lamb Weston. I know that's a name that
Uh,
you've
so
been watching, and it's had a little bit of a fall from grace.
these guys are the potato masters. Seriously, you ever go to like any sort of dining hall or cafeteria or buffet and they don't have French fries? Even
It
even
sounds
in
really
Asia,
sad to me.
there's French fries everywhere. Okay, they buy them from Lamb Weston. These guys literally have cornered the potato market. Like, good for them.
Cornered the potato market. I was
Serious.
talking to Sam Rowe before our episode of Trendlines over headlines last week, and he was like, "Have you ever been to Lamb Weston's website? Apparently, you
I
just
have.
scroll it. It's
I
just
have.
yeah,
You can look at all their products.
just you can pick any type of French fry you want,
Yeah,
any type.
curly fries, the potato wedges.
Yeah,
That's funny. You did that too. I love it. Look, this one just had earnings. It's coming off and it's coming right back to a very logical level. I know I was talking crap about staple stocks. I'll make an exception for this one. It's a secular leader. This is one that you do want to be in, and it's okay to buy in any market because, I mean, let's just zoom out on this chart real quick. Talk about why. Look, came public in 2016, straight shot higher, now straight sideways. I think we go higher again. And look, really clean level here. What, 96? Yeah, $96. I
yeah,
don't love this. I don't love the selling pressure of the last 2 weeks. Like,
yeah. I mean, that's a real just
like that's a nasty candle.
yeah.
And they beat, right? You always want to be a little bit
Ooh,
weary when a company beats earnings and then gets slammed like this.
yeah,
What the market is saying is it doesn't matter. Like, it's got to be really good
right.
for the stock to go higher. Otherwise, all this good news, it's priced in, right?
Yeah,
I hate seeing a stock sell off on what seems to be like pretty nice earnings beat. And that's what's going on here. So maybe it's all baked in the cake, and this one needs some time. But if and when you are going to enter it, we do have a nice level here at 96.
yeah. I like it. Steve, do we have to wrap it up now, or do we have
Yeah,
time for a couple more?
no, we got PTPA at 2:30, and we gotta go.
All right. Well, I'm sorry if we didn't get to some more in the chat. Be sure to email us at questions@Stock Market Media, and we'll be sure to get to them on Tuesday, right?
Yes, next Tuesday will be the next chart request live, 1 o'clock Eastern time. Same place here on Stock Market TV.
Good stuff. Good stuff.
Thanks everybody for joining us. Signing off. I will be on tomorrow morning, as always, with the morning show at 8:30. Hope to see you there.
Awesome. Cheers.